Welcome to today's video, where we're going to be discussing VAT and the rumours currently circulating regarding the VAT threshold. Is it going up? Is it going down? We don't yet know. My name's Ben Knapp. I'm the Managing Director here at Nouveau Accountancy. I'm going to be joined today by two guests, and we're going to explore what VAT is, what the current rumours are around the VAT threshold and what that could mean for you, and most importantly, what you need to do today to make sure you're ready for any eventuality. Let's get stuck in. Thanks everyone for joining us. I'm joined here today by Chris Littlewood, one of the associate partners in our Derby office. Chris has too many letters after his name for me to bother trying to say them all. But Chris has a wealth of experience in advising small business owners on navigating compliance challenges throughout their business growth journeys. I'm also joined by our commercial director, Dan Johnson. So Dan, prior to his role as a commercial director, spent a lot of time working with clients, over a decade of client experience, again, supporting clients through compliance challenges, through making sure that they're growing healthily and keeping on the right side of all the rules. Thanks both for joining us.
Thank you for having us.
So let's take it all the way back to basics, Chris. What is VAT?
So VAT is a charge on services or goods rendered to customers. Those can be business customers. If it's a business customer, they can recover the VAT on their side. If it's a genuine public customer, such as myself as an individual, I can't recover the VAT unless I'm registered for VAT as an individual for self-employment.
Okay, so it has quite wide-ranging impacts because it's not just the business owners, it's us as...
Yeah, the general public is affected by VAT, yeah.
Okay, and it's always one rate, the different rates?
So there are varying rates in terms of VAT. You've got exempt, which is outside of VAT altogether. That sits in things such as residential properties where you can't charge VAT on rents, such as AST rentals. You've got the 5% rate, which is the domestic rate. You tend to see that on your utility bills. 20% is the standard, and then there's zero rate as well. So it depends on where you sit for the ratings. If you're on exempt, you can't recover VAT as a business.
Okay.
If you're on any of the other ratings, you can recover VAT because it's a vatable expenditure business. Okay,
so you could not be charging VAT on your sales, but you still get to recover the VAT.
So that's the zero rate endeavour, and that tends to be businesses such as pharmacies. They tend to sit in those sorts of areas.
I think children's clothing as well is another one that always crops up. I only know because my wife can still buy kids' shoes, so she's often buying those. Okay. Any sort of, Dan, any common misunderstandings or myths about VAT that you come across, people asking you about it?
Yeah, I think, some people think that VAT is always a bad thing and people don't want to grow their business because of hitting the VAT threshold, that magic sort of 90k barrier that people will work up to and try and not go beyond. But there's some businesses out there that could be VAT registered because they are what we call a B2B business, a business to business, where they can charge VAT on top of their normal price and then recover the VAT back off all their expenditure. So net, they could actually be better off by being VAT registered.
Okay, and then in terms of what it means practically for a business owner, let's say I've grown to the point now that I've reached that VAT threshold, I've tipped over it. What actually happens? Is it automatic? Do I need to do anything?
No, so it's not automatic. In terms of what you have as a business responsibility is to be checking your turnover on a monthly basis, on a rolling basis is what we call it. So if you've gone over the 90,000 threshold in a 12-month rolling period, then you're going to trigger the requirement to register for VAT. Okay, you can register voluntarily in advance of that if you want to, or if you know you're going to sign a large contract which is going to be over the VAT threshold, then you've got 30 days to register. So there are different requirements of when a business would be required to register for VAT, depending on their specific circumstances.
Right, okay, so it's a physical registration that you have to then submit. Okay, and that's done generally through your accountant, I suppose.
Yeah, you can self-register. You can set up your own .gov business gateway for your own VAT registration, and your accountant can also set up an agent authorization gateway as well, so that both you can see that position and your agent, your accountant, can see it at the same time.
Okay, and then from that point, you start charging VAT on your sales that you're applicable.
Yeah. So at that point, then you need to start making sure that you've got VAT compliant invoices, so that you're preparing them in the correct format, showing the VAT on those invoices, and showing your VAT registration number, so that any other VAT registered business that you're servicing can then reclaim the VAT because they've got your VAT number.
Okay, and also, I suppose importantly, making sure that you keep the invoices that people send to you as well with the VAT.
Exactly, yeah. So there you can start recovering as well.
Okay, so Dan, I've just registered for VAT. It's my first quarter. Typically, it's done in quarters. So it's my first quarter. I've got all my invoices. I've got all my sales that I've charged VAT on. I've got all my purchases that I can claim VAT on. And then I net the two off.
Yes, to a certain extent. So there's going to be some items that aren't wholly exclusive to the business, or there may be entertaining receipts which you can't recover VAT on. As an accountant, we would look at that for you, go through it, reclaim any VAT that is applicable, and put the VAT charged as well onto your VAT return. We're able to offset the two and then tell you what the balance is at the end of the quarter, ready for you to pay that.
Okay, fab. So how long do I have to pay that? So if the quarter's finished on the 31st of December, how long do I then have to pay the VAT?
Yeah, so when your VAT quarter's finished, you've got a month and 7 days in terms of where you've got to make your filing and your payment. So in effect, if you've got a 31st of December quarter end, then you'd be expecting to be paying by the 7th of February.
Okay. So I've potentially gone from a business that used to make one payment at the end of the year, just my corporation tax payment, and now I'm going to have 4 VAT payments and still my corporation tax payment.
Exactly, yeah. So VAT is totally different to corporation tax. VAT is that 20% potential standard 20% uplift on your sales prices, and your corporation tax is a tax due on the profits, which is your net sales less your expenditure. So they are two different.
Right, okay. So you touched on there the fact that it's my net sales is my corporation tax. So the profit and loss account that my accountant kindly provides at the end of the year with my sales and all my expenses and then my profit, that's not actually affected by VAT.
No, so that's not affected by VAT unless you're on something like the flat rate VAT scheme, where that would have an impact on your P&L position because it's just treated in a different way in terms of how it's calculated. But standard VAT, where you're reclaiming VAT at 20% or whatever percentages you're getting on the invoices and you're charging clients, that does net off, and that sits on your balance sheet as a liability owed to HMRC on a quarterly basis.
Fantastic. So I know we've all seen, and this is what this video is in response to, is we've seen some rumours online about the VAT threshold potentially changing. Now, I know it changed not too long ago for the first time in a little while. So with those rumours, I think there's two ways it could go. And I've seen articles about each. Surely if it's raising, so we put the VAT threshold from £90,000 up to £100,000, which is one of the rumours that I have seen. And I will reiterate, fully rumours at this stage, nothing has been confirmed, and we're just discussing what's been talked about. So it went up to £100,000. Surely that's a good thing, because all businesses now, as fewer businesses have to register for this extra compliance step and have to charge VAT to us as general consumers.
So yeah, in my opinion, if you raise VAT, yes, you're going to have less bureaucracy for those businesses that are staying under the VAT thresholds. In terms of it being a growth mechanism for the economy, not so much, because every business has now only got the scope to grow an extra £10,000.
Dan, I think you have some views on whether it's best to raise this or lower this generally.
Yeah, absolutely. I mean, from my experience of looking after clients of varying sizes, from a small sort of one-man band or a rent-a-chair hairdresser, or up to a used hairdresser as an example, but up to a salon owner where they could be turning over anywhere between 30 and 120k. So if the threshold did drop, then what it does is it balances the playing field for everybody. So and equally it enables those clients to grow without worrying about hitting a threshold, because if you're a sole trader and you make 90k in sales during the year, and then you breach the threshold, if you can't recharge that back to your customers, or you can't add it on top of your invoices, you've got to get towards 120k to make exactly the same net margin. So it's a big gap there. So if the threshold dropped, it'd level the playing field for everybody. And most full-time sole traders will all be in the same boat. It'll just be consumers such as you and I that would lose out because we'd all be charged 20% more.
Yeah, I see. So because the other rumour is that it potentially is going to be lowered as low as £30,000. There's some advocates for that in the government. I think I've seen articles by people like Dan Needle as well, who said that if you did do this, you would potentially burst that bubble that we have. Where and there's a graph that hopefully Kai will be able to put up for us quite smartly here, but there's a graph which shows the number of businesses with varying turnovers, and it's on a slow decline all the way down. Then £85,000 it suddenly drops, and there's all these businesses that are basically bunched up, only turning over £84,000, and probably deliberately making sure that they stay around that amount to avoid the extra compliance. So I suppose if we were to look at any real world examples of what people are currently doing, the lengths people are currently going to make sure that they don't turn over, then I've got any stories about that? Because I know I've got one. So.
Excuse me. So yeah, when you're talking about the VAT threshold, you tend to see that it's businesses that are serving the general public that get concerned about VAT, because they say, right, well, I've got to then uplift my charges by 20%. That customer's not going to be able to recover the VAT in their instance, so it's an extra charge to them, and they may look to go to somebody else who stays under the VAT threshold. So I'm not as competitive if I start to charge VAT. And prime example of that is a plumber, my plumber. He comes around to me, he does my work for me, and he says, oh, I'm knocking off for a few months because I'm getting to my VAT threshold. So they just down tools and stop working.
They're terrible for the economy, really, and the productivity that we hear so much about in the economy. I know, Dan, you had hairdressers that would go on holiday. And
yeah, that's it. Yeah, say, I've get to it, do the Christmas rush, cash in on the Christmas rush. Everyone wanted to get, their hair done ready for New Year's Eve and such like, and then down tools for, or reduce days down to minimal days just to keep their clients ticking over for the remaining 3 months, which is madness. But I get it. If they're more expensive, like Chris says, if they're 20% more expensive than the next salon down the road, then their clients are going to start leaving, or their opinion is that their clients will start leaving. So yeah, I understand why they do it, but yeah, for the economy and for the wider businesses, it feels like absolute madness to have that pressure to, if I breach my threshold, I'm ultimately, if I don't do much more than the threshold, I'm out of pocket effectively.
Yeah, and these cliff edges are often talked about. I know there's a similar situation with PAYE, the 100k kind of PAYE cliff edge threshold. I think only difference there is it only affects everything above that, whereas the VAT, once you're over, all your income is affected, isn't it? Okay. So generally speaking, we think that there's merit in both ideas. You can open up hopefully some productivity by moving that threshold up and allowing businesses to grow more. Whether or not 10k would be enough to actually do that, we don't know. And then there's the other thing where Dan's saying leveling the playing field. Every full-time business effectively gets registered for VAT.
So yeah, that's the stance that the mainland Europe is taking. That if the VAT threshold is lower, then that cost is being passed on to the consumers. But the consumers then understand that actually it's not a cost that is in your back pocket substantially. So if you're already shopping at Tesco, you're already using Mercedes to do your servicing, these are already VAT registered businesses, so you're already suffering VAT. It just becomes those businesses that you've dealt with that have kept themselves under the threshold that you then start to see that 20% increase on.
Yeah, okay. And obviously, as we already discussed, it's not necessarily a bad thing for every business, because VAT, if you were, for example, in a standard rate industry, you may choose to register anyway. Okay, brilliant. So I think just one more point that I wanted to make on this. If I'm a business today, I don't know what's going to happen. And this is why we do generally avoid discussing rumours too much, but we thought this one might be worrying people a little bit. So I don't know what's going to happen. What could I practically do today to prepare for either eventuality, either it going up or it coming all the way back down?
So I guess, the main preparation is to be ready with your records. We know we have the clients that turn up in January with a bag full of receipts. So, they're ultimately not going to be in a position that if they did get to the VAT threshold that they're going to be able to deal with that effectively. So the most proactive way you can be about it is, using software, taking pictures of your receipts, logging them in that way, so that when you get to that point, and if there is a change, you're more than prepared to, be ready for VAT. And equally, from a cost perspective as well, as accountants, the people that bring in manual records, naturally the cost for us to deal with that is going to be higher than if it's all nicely ordered in a digital software that we can then go through, effectively check that it's all right, and then file the VAT return for you.
And Chris, what happens in the situation where potentially if something does change? but I bury my head in the sand, I ignore it. What happens from a compliance point of view with HMRC?
Yeah, so in terms of HMRC would expect you to register at an effective date, and that effective date is determined by their VAT registration thresholds. So if that's going up to £100,000, then it's again monitoring that 12 rolling month turnover to see when you've reached the 100,000. If though it comes down to 30, your rolling months are going to be to the 30,000, and you're going to be over a lot sooner. So, having some practical checks in place to make sure that you know when your effective date of registration is essential. Late registration can come with fines and penalties, and it also leads to late payment because they would have also been expecting you to pay your VAT at an earlier date as well, and you'll get interest charges on the late payment as well.
That's a common misconception, isn't it? Is that people think that it's their financial year that the VAT applies to, not the 12-month rolling, and that's, I think, what catches a lot of people
so
out.
a lot of people think it's an annual anniversary, but for VAT, no, it's a 12 rolling month period.
So regardless of what's changing, I need to know my monthly turnover effectively, don't I? I should know my numbers in that sense and be able to provide those.
And another practical thing is, when you're thinking about this, if you are looking to register for VAT, you are entitled to claim pre-registration expenses as well. So for services, you can get up to 6 months prior to your VAT registration. And for goods, you can get up to 4 years as long as they've been used in the business for VATable purposes, or you've got assets that you've retained in the business. So if they are pushed to that 30,000 threshold, and you have to register for VAT, having adequate copies of receipts and making sure you understand your invoices that you've received may mean that you can claim some VAT that you weren't expecting.
Oh, wow, fantastic.
What's examples of that? Sorry, just
so examples of that. Let's say you're paying your accountant. Your accountant is a VAT registered business. You're going to have 6 months of invoices from your accountant potentially, if they're on monthly billing, that you're going to be able to recover. If you're paying subscription services where it's a VAT registered business that's charging you for those subscription services, you're going to be able to recover that. So it's anything like that. If you've bought a van for your business and that was a VAT registered purchase and you've still got that van in the business, you're going to be able to claim VAT against that. So it is very wide scope in terms of what you can claim VAT on in those pre-registration periods, as long as you're within the VAT compliance rules.
Okay, wow. So I think another question then, just off the back of what you were saying there, you've talked about all these things that you can do when you, prior to being VAT registered, you then become VAT registered. What happens if my business then takes a big turn and it drops down and my turnover goes all the way back down to 50,000?
So in terms of that, if you are then looking to have a lower turnover business, it would then be a case of doing some analysis with your accountant to understand whether staying VAT registered works for you because you're recovering enough VAT in terms of expenses that you're incurring, that the actual margins don't make a significant change to yourself. If for any reason it does, then it's about potentially deregistering for VAT, which you're allowed to do under deregistration thresholds. Okay. When you do deregister, though, any VAT that you've recovered on assets that you've retained, such as that van, may need to be paid back on the final VAT return when you deregister.
Right. Okay. So you can get back out of VAT if you do.
Not a requirement to stay in there if you are under the thresholds, but it's just a case of sense checking whether it's right to come out or not.
You did say there your accountant will sit down with you and see if it's worth still being VAT registered. And this is something that we did touch on earlier. There's zero rate businesses, for example, are a good example where you might be better actually, regardless of the fact that you don't have to be, you might be better to choose to be VAT registered. There's a practical next step for businesses that are potentially worried about this. They should already be assessing really, should I be VAT registered regardless of whether or not I have to be today?
Yeah, and not only should they be worried, understanding whether they should be VAT registered or not, but what's the right VAT scheme for them to be on. So when I touched earlier about flat rate schemes, flat rate schemes are a viable method for small volume businesses to look to register for VAT, where they pay a standard flat rate on their gross sales. So let's say they're invoicing £1,000 plus £200 VAT. They pay a flat percentage on the £1,200, but they can't recover any VAT on the expenses that they incur. Now, this can be a comparative where you'd look at standard rate VAT versus flat rate for a client and work out whether they were better on the flat rate. It tends to be that is the case as long as they are not caught as what we call limited cost traders. So they need to be turning over X percentage of saleable goods on a VAT quarter to qualify. But it does mean you can come down to percentages like 8%, 10% in terms of VAT rates. And sometimes that's favourable for the businesses in those situations.
Okay, so some realistic examples of where flat rate tends to be better. Is it hospitality? Is it?
So what it is it's anywhere where you have got a good that you can put through your business that is, so hospitality does work because under the VAT legislation, utilities is actually a supply of goods. So your gas and your electric actually qualifies as goods. So in my industry, property, furnished holiday let, we can push them into the flat rate scheme sometimes and say, actually, as long as your utility charges over your portfolio are significant enough, you can actually benefit from flat rate scheme.
Oh, right, fantastic. And then you touched on low cost traders, which tends to be consultants.
Yeah, so in terms of that consultants, if that's where they're basically charging out for their time in terms of service, and there's probably not any provision of goods to the end client.
Right, okay, and they wouldn't be eligible.
So what they get there is they get caught under what we call a limited cost trader basis, which means that their flat rate is fixed at 16.5%. Okay, sometimes it can still be beneficial to be flat rated in the first year because you get a 1% discount, but then it's always about, say, ensuring whether the right strategy is being applied to your VAT situation based on your specific circumstances. Having those conversations with your accountant is vital.
So it's really not quite as straightforward as just charging 20%.
So yeah, VAT is a minefield, and it is one of the taxes in the UK that is so wide-spanning that it can have an impact across various fields. In terms of what we're talking about, though, this potential change around the threshold, that is around people's requirements to be registered for VAT.
Sounds like, Dan, I should be talking to an accountant sooner than later.
Yeah, absolutely. I think being prepared is the best way to attack this, really, and just be, and like I alluded to earlier, with MTD for ITSA coming in, so it's going to impact a lot of sole traders anyway that probably aren't VAT registered. So I think now is the time to consider whether that is the right approach. So for MTD ITSA as well, you need to be ready for the quarterly filing on that too. So by being VAT registered, it may be the time to do it. Taking pictures of receipts, being on a VAT ready software is really, really important. Equally, just so if the worst case happened and HMRC wanted to take a look at your VAT return, all the data's there, held behind the scenes, so that you're able to access that receipt that they want to have a look at quickly and efficiently, and everything's there and ready to go.
Fantastic. So these potential changes, these rumoured changes, they don't just affect the people that are going to be caught in those kind of threshold changes. They can affect every business, because what we're saying is take this as an opportunity to review where you're at today. There's a very realistic chance that you could be better off being registered VAT or potentially changing your business structure. But the best thing to do is understand where your numbers sit today, what's going to be right for you, and we'll get you set up for any eventuality.
Yeah, most definitely.
You did just touch there, Dan, another initialism that HMRC loves so much. So MTD ITSA,
yes.
What on earth is that?
So it's MTD ITSA is basically making tax digital for income tax self-assessment. So if you're a sole trader and you complete a self-assessment form or year-end self-assessment, either yourself or your accountant does it. If you're the first wave is if your sales, so if your turnover is over 50k, then you will need to complete a quarterly return starting June 2026. So the first period, March 26 to June 26. So you will need to complete a quarterly return, and that will be filed to HMRC. So basically, they are ultimately reviewing what you're filing on a quarterly basis, quite possibly in preparation for quarterly payments on account for tax. That hasn't been confirmed yet, but we think that's the way it's going to go. But so alongside that, being prepared is really key. So having, as I alluded to, having software, taking pictures of your invoices, being prepared for that, because the 50k plus side of it is just the first wave. Second wave is coming in the year after, which is 30k plus. So early adoption is probably key. So you're prepared, you've ironed out any issues there could be, and you're ready to take on that.
Yeah. Okay. Fantastic. So it's a situation where you're going from once a year you file your tax return. Now you've got 4 returns quarterly as well.
Yeah.
So if people want more information about that,
So we've got 2 webinars running next week. So on the 10th and 11th of September, because it doesn't just impact sole traders, it impacts landlords too. So if you've got properties and your turnover is over 50k, you'll also be caught by this. So we've got 2 webinars next week. So we'll be putting out links for those for for our clients and anybody that wants to join as well, to find out a bit more about how we can help, the software that we can help you use, and basically what it all means.
Just a quick one on that then. So is it true that anybody that's got a sole trading business plus property, it's the combination of those two that's going to get you over the 50,000 as well? So
yeah, absolutely. They're not looked at in isolation. So it is an aggregated turnover. So if you turn over 30k in your sole trader and you've got 25k's worth of rental income, you will be caught by this new regime. Yes, absolutely.
Wow. Okay. So there's a lot changing and a lot potentially changing as well. So definitely don't bury your head in your sand.
No, always be preemptive with these things, because when you're trying to fix something retrospective, you've not got the capabilities you have as if you're planning with your accountant and actually working towards a strategy.
Thank you for watching. I really hope you found that useful. I know these changes can be scary and sometimes you just need to talk to someone. So if you do, please book a discovery call on our website here. And if not, I hope you enjoyed it.